So Bitcoin is down 28% from its all-time high last month, and it's still falling. In today's video, we're going to explore why it's happening, what it says about this cycle, and how the balance of risks looks from here. So let's break it down. Bitcoin closed last week below its 50-week moving average. Historically, that line has been a clean divider between bull and bear regimes, and closing underneath it has reliably confirmed the start of each bear market during Bitcoin's 16-year history. Granted, it's a very short history, but we can see the same pattern repeated. This alone can't conclusively tell us whether or not Bitcoin has entered bear market territory yet, because we've already seen two drawdowns of over 30% during this bull market. You can see here on this chart, last summer when Bitcoin dropped from $74,000 to $49,000, and this spring when Bitcoin dropped from $108,000 to $75,000. These moves proved to be mid-cycle corrections for Bitcoin rather than a blow-off top that started a bear market. And this current 28% drop is well within that same band of behavior. However, it's happening underneath an entirely different macro context. Bitcoin has obviously been selling off since early October, but since the start of this month, it hasn't been occurring in a vacuum. US equities and many commodities are now selling off as well. Take a look at this chart here. With the S&P 500 and the NASDAQ both down since the beginning of this month, commodities also tell a similar story. There is a much broader dash for cash at hand. Investors across most assets are selling. Let's take a look at the broader macro backdrop to understand where we may be heading next. So the Federal Reserve is slated to end quantitative tightening on December 1st and has signaled readiness to resume asset purchases shortly thereafter. Bitcoin and equities have managed to do incredibly well while the Fed has tightened financial conditions, and with funding stress on the rise with no end in sight, the Fed may be expanding its balance sheet sooner than later. So if this plays out, what we're living through right now is likely another correction in an ongoing bull market, not the start of a deep multi-year bear market. Clarity should emerge over the next several weeks as to what's going to happen next. In all likelihood, we've already moved into an era where Bitcoin bear markets are shorter and less severe than we've seen in prior cycles. Institutionalization has likely changed the structure of the market forever. Even though Bitcoin is down 28% from its high, the assets within spot Bitcoin ETFs are practically flat, which means that the selling pressure is coming almost entirely from spot Bitcoin holders. ETF holders have proven that they're much less likely to sell their Bitcoin during major drawdowns like this, making for a market structure where drawdowns simply aren't as deep as prior cycles. Let's add in one more factor, and that is politics. As midterms approach next year, the incumbent party simply cannot afford a full-scale asset price collapse. Now, that doesn't eliminate volatility, but it reduces the probability of a deep, prolonged downturn. So put all of it together. Bitcoin is down 28%. It's already weathered two prior 30% plus drawdowns in this bull market, and it just lost a 50-week moving average as all risk assets sell off into a liquidity crunch. However, within the next several weeks, the Fed is slated to end QT and potentially begin an asset purchase program. The pain may not be over, but everything points to support potentially being closer than not. So if you're thinking long-term, the question isn't, is this the top? It's, am I prepared for these drawdowns and how do I use them? And if you're a homeowner looking to grow your Bitcoin stack without taking on new monthly payments, that's exactly what we're building at Horizon. Horizon lets you buy Bitcoin using your home's equity without new debt, monthly payments, interest charges, or term limits. To learn more and see if you qualify, visit joinhorizon.com or scan the QR code right there. That's all for today's video. Thanks again for watching. I'll talk to you soon.